Hello traders, Trader Dave. It's evening of after the market on October 14th. So we actually did not get filled on CVS or on the TZA, which was the triple ETF, even though we got our midpoint of the options into the price that we were looking to get. The market makers didn't fill us, but that's okay because there's always going to be other trades. Looks like this week the four trades that we've picked have gone our direction so far. Obviously that can always change, but that's always a good sign. So for October 15th, there's a couple that I'm looking at to do. The first is to take a look at Anthem Health. Again, I think if you watched yesterday's video, you saw that we felt that healthcare was, and the industry and the companies that support healthcare, even the insurers, might have some issues. I wasn't going to be a big fan of selling or buying biotechs themselves because of the debate from the Democratic Party last night where they were talking about price controls. But I'm looking at possibly a retreat on Anthem pricing here. So ANTM is the symbol. Now it looks like a little bit of momentum to the upside might be left here. So I'm going to let this thing get back up to maybe this 146, 147 area, and then I'm going to look to buy some puts. If it gets above this 200-day moving average, the $150-ish level, then that's a place to get out. So I would be looking to buy the 150 puts and then selling the 145s to offset the cost. As long as I can get a 2-to-1 return, I think that's a pretty good investment. That's why I actually didn't follow through on the CVS. I put that on the trading group page as well. I like to see 2-to-1 or 3-to-1 risk reward. And the TZA was actually almost a 3-to-1, so I was very excited about trying to get into that. But with the market going down and the inverse relationship of that going up when we were trying to get calls, we weren't going to get filled on that. So we'll take a look at CVS real quick, what it did today. There's CVS, so we were looking for it last night to go down. It opened up a little bit to the upside, but then you can see it ended up down 1.5% for the day, so that was our call on that. And another one we're going to actually look at is F5 Networks. So this is in the technology sector, so you can see it's actually had a pretty decent decline already. And then, of course, we like to see our Fibonacci's on here and see what possibly type of retracement this thing's had. I like to see a 50% retracement, so I'm thinking if we can get ourselves back up in here, at least a 38.2, because you can see that this swing from right here in August down to the low in September, it actually went 50% exactly, and then it started heading down. So you've got the moving averages around here possibly getting ready to cross, which would be its death cross. And we have a video on that as well. So that's what I'm looking at. I probably won't be taking any trades in that tomorrow. I'm going to be looking to see if Anthem will go up and try and get into that. If you remember, we also talked yesterday about the home construction, how we felt that sector was going to be rolling over. And that's what it did today. It was down 2.5%. I still think that there's going to be more down to that. And then we also talked about the Russell 2000 mid caps and the smaller cap stocks, and that's what this did today. So you can see we have our drawing lines from yesterday on there still. Get rid of those. But you can see that it's had a couple of bad days right in there. This is where we called it. So I think that anything below this 110 level is going to be extremely bearish and could really accelerate some things in the market here. And the market went down quite a bit today. It was down 157 points, the Dow was. A lot of that had to do with Walmart being down over 10% for the day. So Walmart's a very large cap in the Dow. And then also Delta Airlines was not helpful at all in regards to the stock market being up or down, as it actually came in after hours and said that they were going to possibly have some issues as well. So that looks like that ended up being a little flat for the day. As far as the buy side, we actually have a little bit of a buy side action here in Synaptics. I'm not a big fan of this signal because the death cross is still underneath, although the moving averages are moving up. The reason why I don't like this long, even though it's setting itself up for one, is because you can see that it had one heck of a move right here, which was about 20%. And then it's been kind of squiggling back and forth right in here. And then it had a pretty good day today, up around 2.4%. I don't like chasing things that are up like that, and I'll tell you why. As I showed you before in regards to the Fibonacci's, let's say that you have this. Well, let's just go back right to here. So let's say that you decide to get in here around the $83 level. Well, if it decides to retrace from this swing low up to this big spike up here, you're looking at $72, $73 as a retracement. So if that's the case, and you can see the MACD is actually starting to go down, showing that some of the momentum is stopped, but you know, it can easily stop here at the zero line and then go up like it did here, where it did go up about 10, 12%. The point is that if it's going to retrace, then you know these are going to be the retracement levels. You're going to either have to eat an $8 loss or an $11 loss before it gets moving, or it could completely reverse as well. But there's other opportunities out there um, to buy something. So I'm not going to try and curve fit anything to see if I can buy something or sell something. I just want it to naturally come. And I'm very picky about these things. I mean, I've had some people say, well, don't you get mad that you don't get filled on some of these orders. You're right on the direction and the price, so you would have made money. Well, that's true. And I don't get mad. I just understand that I like a specific type of risk reward. So for instance, today on the CVS, I could have taken in a 1.5 profit over risk potential, but that's not my trading style. I want to see it around 2 to 1, where I'm making $2 for every dollar that I'm risking. And I'll do spreads with it if I have to, or I'll just I'll do a different options combination, or I can buy the stock and short some calls, or there's a lot of strategies out there for me to make income. And all I need to do is make a couple $1,000s a week. It's not like I have to go out and find 500 trades that is going to make me happy. So I just want to find one or two a week, or maybe even two a month, as long as they pay off really well, so that I'm making the income that I want to make. So yesterday we also talked, just to cap off yesterday's review, we thought that the TZA, which is the inverse small cap bear 3X ETF from Direxion, we thought it was going to go up because the market was going to go down. So you can see the signal right there, and it did go up. It was up 2.53%. Now, I wish we would have gotten into the options, because the options spread would have been up around 8 to 10%, but we didn't get filled on that. So we're going to keep an eye on those types of things. I think that for now, I'm going to focus on Anthem for tomorrow on the 15th. See what happens. There's some earnings that have come out tonight around Netflix, and I also know that Boeing actually weighed on the Dow today. You can see the big spike down, but you can also see here's their death cross right there. So when it comes back up and touches this 50 moving average, which is the cyan line, you can see it just kind of snuffs it out. And the fact that it can't get back up to this 142.85, which is the 200 moving average, that just kind of tells me that there's more weakness coming as well. There's also a divergence here where you can see that the MACD went higher here versus it did here, even though the prices were pretty much the same. So if you take a look at our MACD video, you can see the divergences that we like to actually trade. This actually crossed over here, so you could see some follow through to Boeing back into the 120 areas. Not $120, but in the 120, so somewhere in here. It's probably going to retest this low down in here as well. And then the last thing I want to talk about is Netflix. So Netflix came out with their earnings, and this doesn't really tell the full story. So what they did was, let's see if I can turn this on, where we can get the 24-hour session. So I'll put it in there for a 60-minute chart. And then I'm going to add the after hours so that you can see what happened after hours when their earnings came out. We'll wait for that to pop up. And I'll pause it until it pops up. All right, traders, so we're on the other side of this data popping up. So you can see that this is the end of the trading session at 1 o'clock Pacific time, 4 o'clock Eastern time. Earnings came out. You can see that it went from about $110 all the way down to 95, and then it recovered after that. So it's trading about 106.89 in the after hours right now. The reason why I bring that up is that you want to watch what Netflix does, because we also did a video a while ago that shows the correlation between Amazon and Netflix in regards to how they trade on their earnings. And we actually made quite a bit of money on Amazon last time Netflix came out and had their earnings, and then the stock went up quite a bit for Netflix, which gave us an indication to get the Amazon calls. So right now, we actually went way out of the money on those two, almost $50 out of the money, about 12-15% out of the money on those, and they became in the money quickly after earnings a couple days after that. So that was one of our home runs for 2015. So what I'm saying is that you know, one thing that we're going to be doing is just taking a look and see where Amazon's earnings report is going to come out, and see how Netflix reacts over the next few days, because we have a feeling that Amazon's going to mirror that. So, all right, traders, that's it. Looking to take a position, hopefully in Anthem to the downside. Again, I'm waiting for it to go up a little bit, so I'm not jumping in right here at the 143 level. I'm going to let it go back up in here again. If it doesn't and it just decides to go down, well, let it go down. But I want to make sure that this is a setup for me, because I really want to be straddling this 150 to 145 area on the puts. All right, this is Trader Dave. Have a great night. See you on the 15th.